Hey, good evening, everyone. This is Brad Hesselberg with the Market Forge putting together another Saturday weekly review for you. So, if you looked at last week, metals got absolutely obliterated. Crypto is still pretty much dumping. I mean, it's found a relative floor. Who knows where that's going to go over the weekend? Volatility is everywhere. But if you look at the overall stock market, they didn't crash, right? So, that's something that we're going to take a look at tonight. So really the real question isn't like what fell. It's obviously what fell, what saw the volatility, but we want to get an idea of where the money is going to go from here because you don't get huge liquidation shifts and then not have it go somewhere. So we want to take a look at that. Now, before we get started, this is not financial advice. I am a financial advisor, but I'm not your advisor. This is not actual advice. I do give advice, and there'll be a link in the description below under themarketforge.com. We put together a pretty unique offer that gives even smaller investors access to direct financial advice. So feel free to take a look at that. Let's go ahead and take a look at the charts. So we'll go ahead and get started. We're going to take a look at gold first. I think this is incredibly relevant. Look, we're going to talk about this a bit more on Sunday. I want to start talking about, rules that investors oftentimes break. And I think the one that we're going to talk about tomorrow is why we don't buy FOMO. We don't buy parabolas. Okay. This is a parabola. If you don't know what that is, it's basically a move straight up. I mean, you can just see it. It's basically straight up. You don't buy parabolas, okay? Because they're likely to implode on themselves. If you're in the trade, great. If you're not, don't chase it. There's always other opportunities. There's also always bull markets somewhere. Do not chase these things. If everybody's talking about the same thing, it's probably honestly not a trade to get invested into. Not financial advice, but just word of caution, I'll say. But if you look at it, I mean, it was incredibly aggressive. We got some early signs on Thursday that things weren't looking great. They kind of ended up trading back up a little bit, and then Friday you just got this significant dump to the downside. Now, because of how large of a market cap gold has, this is billions of dollars that were either liquidated. It sounds like a lot of this was wrapped up in leverage. There's some conversation about things that went on within the Chinese markets. I'm not going to talk specifically to that because there's a bit of speculation with that. But the fact of the matter is that you got an aggressive sell off to the downside on Friday and a decent amount of money was lost. But if you take a step back and look at this, it's the overall structure is not completely broken, right? That's a scary candle. I mean, that's a big move to the downside on such a large market cap. But the truth is that you're still in the green zone, right? So we broke the weekly VWAP, but we're still above the weekly VWAP. We bounced off of it. We're still over the 50 and the 20 EMA. And we're still in our golden pocket that we created here a while back. So we're still watching that closely. Is this like a buy the dip sort of thing? I would still sit on my hands at this point. Like there's some significant volatility over the weekend. If you take a look at Bitcoin, which we're going to take a look at that here shortly, I'm still going to be wary of this, but I'm going to watch closely. If we consolidate in this space, then that's healthy consolidation, and just watch for that. If we start breaking back into this red zone, kind of where this last move gotten kicked off, and we break through these EMAs and they start sloping downward, then you're likely going to see more price action to the downside. But this is a sit on your hands type of thing. When you see this kind of volatility, you just sit and wait and see what happens. Same with silver. I mean, if you want to look at a parabola, oh my goodness, this thing is. Let's go. Let's look at the monthly just for fun. Like that is straight up. That is straight up for what? 1, 2, 3, 4, 5 months. Okay, that is the definition of what they call a parabola. Or if you hear a parabolic move, that's it right there. That's an impressive move. If you're in that trade, it's very exciting. If you're sitting on the outside of it, you want to chase it. Don't do that. Don't do that. in most cases. Do not do that. Um, and we look at silver. Silver down almost 30%, over 30% at some points during the day. We bounced off of our golden pocket, which is a healthy move. But if you look at your moving averages, we broke our daily VWAP. I mean, we didn't even touch it. It's a gap right there. You blow right through your monthly VWAP, and you're going through the 20 and the 50, and they're all curving down. Not usually a good sign. We're still hanging above the golden pocket, but yeah, again, I'm sitting on my hands on this one. I'm sitting back and waiting to see how this all plays out. Exactly set up. If we find some consolidation here in our golden pocket, that's going to be healthy. If we get down into the red, then we're probably looking at bear territory potentially. It's hard to say with all the volatility and the billions of dollars that are wrapped up in this trade, but keep an eye on it because it will give you some idea as to where things are moving from here. I mentioned it, said I was going to get to it. Bitcoin. So we've been talking about Bitcoin basically since we started doing this show, which was here just a few weeks ago. But it was really my ultimate liquidity indicator. Now, Bitcoin didn't sell off. I mean, it sold off. We broke down below our our bear flag or bull flag here. No, bear flag here. So we were trending to the upside, but it's weak, low volume, looks terrible, and we ultimately ended up selling off. Now, this didn't lead the sell off. We saw gold and silver lead it, and then Bitcoin just kind of went along with it, and we got into a Sunday situation. Bitcoin and crypto, if there's volatility, if there's bad news, if there's things going on that are uncertain, Bitcoin loves to sell off on the weekend. Like I said, it didn't lead this trade, but similar liquidity event, similar outcome. And because it's trades 24/7, it just, these environments, it just dumps. Um, the reason I like to watch this, as I've mentioned before, to me, it's canary in the coal mine. This was looking particularly weak, and it sold off. And silver and gold sold off around the same time. Does it have to do with Donald Trump's pick for his Fed chair? It seems to be happening around the same time, but I feel like there's something more going on in the background. We'll ultimately, hopefully, find out here in the next week. I'm just watching these things closely. When you get high volatility like this, I'm not jumping on anything. I'm watching things very closely. But we're going to be specifically watching Bitcoin with a close eye because I want to see where all this money rotated into, and it's possible that we see it rotate into Bitcoin. That might sound maybe counterintuitive, but there's a reason for that, and I'll touch on that as we go along. I think next one to touch on is worth taking a look at is the S&P 500. We look at this pretty much week in and week out. It's a good barometer, good indicator of where markets are generally. We're still in this healthy zone. Okay, so it looks a little bit ugly. Thursday you had a pretty aggressive sell-off, but then it ended up bouncing up here above the weekly VWAP. Then it went ahead and came in and opened the day. I believe this gap down, opened the day below the weekly VWAP. It sold off again, got below the one of our moving averages here, got below our weekly or monthly VWAP, but then closed above it. So now we're compressed in between the weekly and the monthly VWAP, which is going to create pressure, which is going to create the next move. We don't know which way it's going to go. S&P's been an uptrend. Typically, we'll continue to follow that, but with the overall weakness we've seen in Bitcoin, silver, and gold, the jury's out on that one. Watching it closely. Yes, we are still within our green zone. We still look healthy from that perspective. We're still above this area. So if we can come down here and retest this again, stay above these moving averages and our VWAP, then it's going to look healthy and go into continuation. Okay. If we get through here and these moving averages start to turn over, our VWAP starts to turn over, we get into this red zone and we get ourselves a lower high, then we're in trouble. okay, then we're in trouble, and it's possible that this is going to go ahead and follow what silver and gold and Bitcoin have been doing. And that's why I was looking at Bitcoin as the canary in the coal mine. It looked terrible. Why do all the other assets seem to be outperforming while Bitcoin seems to underperform? Is it because crypto is trash? I don't think so, but ultimately that could end up being the underlier. But up until this point, Bitcoin's been a strong asset. It's been a really good indicator of liquidity, and that's why I watch it as closely as I do. With that said, we've been hitting on the S&P 600 for the last few weeks, I think for good reason. So we broke our all-time high, which is the first time we'd done that since I believe 2023. So that was or 2024. That was a good indicator that markets were looking strong. So now the question is, was this a bit of a fake out? Or is this an indicator that markets want to get more risk on? And just as a reminder, S&P 600 is small cap equities. Okay, so typically if small caps are doing well, that's a risk on environment. Like institutions are looking to buy, and they're looking to buy lower cap stocks, which means that they're going further on the risk curve and they want to get into those assets. Now, where the concern of mine always was is that the S&P 600, Russell 2000 were looking strong, Bitcoin was not. Okay, that's the risk on asset. So if the small caps are moving, why is Bitcoin not doing the same thing? And maybe there's an underlying reason, and maybe we're going to find that out here in the near term, and this was actually just a fake out. We don't know. But again, you're still in this support zone. Your 50 and your 20 and your 50 are still, they're still above the 50 and the 20. You're still above your monthly VWAP. You got below your weekly VWAP, similar to what you saw in the S&P 500. It looks like it wants to curl over a little bit. You won't really know until that really rolls over and you start to see it come down. If this closes here and we just continue to move to the downside, then we have a lower high and we potentially have some downside in front of us, which is certainly possible. Next week is going to tell us a ton, and there's going to be some things that I want to look at as we keep chatting. The dollar index. So I don't know if we covered the dollar index in the past. This was something that I've been watching here for the past week for sure. Was the close below this major trend line. Okay, this is a decade long trend line that we've been watching, the dollar. So the dollar is the Dixie. We're tracking the dollar, right? Basically, it's the dollar compared to a basket of other currencies. And when the dollar goes down, typically equities, crypto, risk on assets go up. And when the dollar goes up, we get the inverse. They go down. So it's an important thing to take a look at if you're investing. If the dollar looks really strong, typically that's not a great investment or a great environment to be investing in, unless you're looking at sort of alternatives and not traditional equities. But if you're talking traditional equities, typically Dixie down, equities up. Dixie up, equities down. So the reason we're looking at this is because we had a strong move to the downside on Tuesday, right? And it closed below this trend line. Now, what we want to see is, where does it go from here? Now, we got this strong candle that just went up the entire day on Friday. And you ask, where is the money going when it leaves gold and silver? It's going to the dollar. At least that's what it looks like from here. Is that people are going into the dollar. So they're selling their gold and their silver for dollars. And that's probably why you saw this impulsive candle to the upside, because that's what was going on. Now, what we want to know is what happens here. What happens there? If we reject this, then you're going to see risk on assets continue to likely outperform as people sell their dollars for stocks or whatever it may be. And you might just see gold and silver, that might have been just a minor pullback, and you might just see it continue to the upside. We don't know, but the dollar is going to tell us which way it's likely going to go. So what we're looking for is if we can stay and close above this trend line, these are going to be resistance. The 20 and the 50 are going to be resistance. So we can come up here and tap that and come back down. So we could get above this trend line, but the real test is going to be what happens if we even get up this high. But you need a pretty good move for this to get bullish again, to be honest. Like you're, and it doesn't have to happen all in one move, but it has to happen relatively quick. Like you got to get back up to this box. Okay, so this is where the original breakdown happened. We need to get back up to this box. And then from there, what happens? Like if we just kind of go up this way and we get back into this box and we reject from there, it's still bullish for equities. So we could see a risk-off environment period, but it's all going to depend on what we see from the dollar index. Very important to watch that one. This is something that it kind of goes hand in hand with the dollar index. This is the Fed's overall balance sheet. Okay, so we look at this because we want to see if the Fed is selling or buying assets. If they're selling, they're doing what's called quantitative tightening. That means that they're selling they're selling off their assets and they're tightening liquidity, right? They're not buying new things, they're not putting cash into the system. If they're if they're neutral or if they're expanding the balance sheet, that tends to be bullish. It means they're putting cash into the system. That means that banks and institutions are getting their hands on cash flow, which ultimately ends up making its way into markets more often than not. It's not exact, but that tends to be the correlation. So we want to watch this because, wrong one. Because we want to go back here. Let's go back a ways. So this was a flat period, and then we're going to get into COVID territory where we saw them expanding the balance sheet. And we know what happened in COVID. They printed money and markets went just absolutely parabolic after some pretty horrific price action to the downside. We probably all remember that if we were investing around that time. So then you saw it expand to the upside. So this is our 20 and our 50 EMA. Okay, so the red crosses over the yellow and we get bullish and we get real bullish. That is parabolic. We want to buy this one though. We want to catch it down here and ride this thing up. So we come back here. Then we had a peak up in 2023, and this is when they had to bail out some banks. That was the Silicon Valley Bank, and there was another one I can't remember the top of my head, but you saw a nice liquidity spike, and then it just continued to stay below the 20 and the 50. What do we have here? So we recently, December 1st, they ended quantitative tightening. Doesn't mean that they're easing, but we can see that their balance sheet is now expanding. Okay, expanding for the first time since 2023 tends to be bullish for risk assets. If we go back here and we look at our momentum indicators, and this shows quantitative tightening perfectly, is that you had just absolute tightening. So all this red is, in this case, usually it shows selling and then green is buying. Same thing. They're clearing their balance sheet. You had red for years, and then you're starting to see an uptick. And if you can see this wave here underneath the red, you can see it's pushing heavy to the upside. Okay. When was the last time we saw that? Oh, it's right around COVID when they started expanding the balance sheet. Interesting. Does that mean that that's what's going to happen? No, of course not. It's just an indicator, but it helps us evaluate the current situation. So we spiked up, came back down. If this ends up being, let's get in real close so that we can see that. If this ends up being a higher low and we continue to trend up, we can get above the 50 and the 50 starts crossing over this one. That's bullish. We're moving in the right direction. Okay. That's what we're watching for. Is this just a sell-off before they start expanding the balance sheet? Who knows? Time will tell. But these are the things that we need to be paying attention to so that we're aware of our situation. Whenever we're investing, we want to make sure that we're aware of what's going on around us. Oops, let's fix that. Okay, so now we want to know where are things going? Now that we've had the big silver and gold sell off and Bitcoin selling off aggressively, where's that money going to go? Is it going to sit in the dollar? Is it going to sit in stable coins? Only time will tell, but we can look back in history, and it's not uncommon for when you get big silver and gold sell-offs like this, it's not uncommon to see it rotate into energy and value. Okay, so that's what we want to look at next. So we pull up our energy chart. Okay, this is just this energy selects sector ETF. So it gives us a pretty decent barometer of what the overall energy sector is doing. And we go to the weekly chart so we can see this a bit more clearly. But what do we see? Breaking through previous all-time high. Last time we saw this was back in 2014. So now we're starting to see a breakout or a potential breakout. You know, we're kind of right there above that high that we haven't seen in a really, really long time. So it's not unusual, and you're really kind of right at the high. So it wouldn't surprise me if you see here and it pulls back a little bit and then goes higher from there. Maybe. Or it's just going to go ahead and do what the S&P 600 did last week or the week before, and it just goes ahead and breaks out, and then we see where it goes from there. But this is where we're watching. Watch energy closely next week. If we see energy find a pump or it gets some momentum, we have some idea where some of that gold and silver trade went to. Next thing we're going to look at is value. Now you look at the Vanguard Value ETF, pretty easy to find, and it's going to hold a basket of, you know, value stocks, probably dividend paying stocks. And what you see here is really it's just been going directly to the upside. And this is at all-time high. So again, we see another all-time high. Okay, so let's just take a step back and think as an investor. I have cash. Do I want to be buying assets at all-time highs? I mean, maybe. It doesn't look particularly appealing. I mean, it is bullish. It is attractive to buy assets that are going to the upside. But how much upside potential is there? So that's why I'm watching things real closely next week. And that's why I'm specifically watching Bitcoin as closely as I'm watching. If I'm an investor and I'm looking for opportunities, I'm looking for something that's oversold, I'm looking for something that looks like it has some upside, maybe I'm biased, but to me, the best upside is Bitcoin. Like, we've aggressively sold off. We're at 78,000. We were at 125,000. Okay, we've lost like 50K in value per Bitcoin. But maybe I'm wrong. So that's why I'm going to be watching this one closely. I want to know where the cash goes, if it does go somewhere. It's always about figuring out the rotation. If you have a massive sell-off one place, that means that you likely have bullish momentum going into something else. So that's what we're going to be watching. So yeah, that's kind of your homework. Keep an eye on the S&P, the S&P 500, the S&P 600, Bitcoin, the dollar, and we want to keep a close eye on energy and value, because that's where I think the rotation is likely going, but we don't know until we get confirmation. All right, well, if you enjoyed the content, please like and subscribe below. And like I mentioned, I'll put some stuff in the comments below about my financial advisor unique offer that I offer to folks across the country. And then I've also put together a PDF below that will help you understand how I put together my synopsis on what I'm looking at. It can help you become a better investor. Anyway, appreciate you watching and have a great day. Take care.